February's headline employment data blowing past expectations, adding 275,000 jobs versus the projected 200,000. But we're seeing some softening with unemployment ticking higher to 3.9% and, of course, downward revisions to job growth. But overall, the labor market does remain strong. To break down how this squares with investor optimism for a June interest rate cut, Veronica Willis, Wells Fargo Investment Institute strategy analyst, is here with more. Thank you for joining us this morning. And so, of course, we're looking at this big headline jobs number, but in the back of our minds, also keeping in mind the significant revisions that we saw in December and January, down 167,000 with that. Is this investor optimism still justified?
Yeah, I think what we saw this morning is a still solid job market, but then, as you mentioned, signs of some softness there that bears watching. So we've got some downward revisions, but it was revisions to numbers that were still pretty good for December and January. And then that tick up for that unemployment rate still leaves us at a pretty historically low unemployment rate. So we're not at numbers that are concerning yet, but it is a sign to watch going forward. And what we've seen in some of the recent consumer sentiment and consumer confidence surveys is that the consumer is starting to get a little concerned about the labor market. So it's something that they're watching closely.
Veronica, we heard the president yesterday, the State of the Union, touting his economic policies, but talking specifically about where we are in the economy right now, saying the economy's landing is and will be soft. Is that what the state is pointing to?
Yeah, I think we're seeing signs that the economy is softening, but that we're not going to kind of get into negative growth there. We're not expecting a recessionary situation, but we are expecting growth to soften from that really high growth that we saw in the third quarter of last year. We've started to see some softness already with that fourth quarter data that came out, and the trend is continuing for some economic softness.
And so then as we look sort of digging within some of these earnings reports, which are also a good indicator of what's happening versus some of this backwards looking data here, what is that data telling us? And how does that square with some of the projections that we're expecting for a June interest rate cut?
Yeah, I think what's really interesting is that we've seen those earnings for the large cap space in particular exceeding expectation as those larger companies have been able to kind of withstand all of these economic uncertainties a little bit better than what you've seen in the small cap space. And that's really translated into our guidance for favoring the large cap space over small cap, while there are still some uncertainties underlying the market. We haven't seen small caps really benefit from that same still strengthen the consumer that we've seen in the large cap space.
And the biggest trade that's most overlooked, you think, Veronica, right now?
Yeah, I think right now the market isn't paying as close attention to some of those some of that PMI data that's been coming out. We've seen some weakness with that manufacturing sentiment for over a year now. We are starting to see the services sentiment declining, and the market is shrugging it off a little bit because it's paying closer attention to that inflation data, paying closer attention to that labor market data. But that is something that bears watching when you're thinking about the economy starting to slow. That manufacturing sentiment has been slowing for over a year now, and services is starting to follow.
Veronica Willis, Wells Fargo Investment Institute strategy analyst. Good to talk to you today. Appreciate the time.
Thank you.